All right, welcome everybody. It's Friday. The markets have just closed, and the most important question that I keep getting, and it's a really important one, hence we're doing just a little impromptu video to cover this, is breakout or breakdown. And my answer really to that is really simple. Kind of follow the leader, right? What does that mean? What is the catalyst for any move that is sustainable? And it's always going to be volume, gang. So what we thought might move the market, news. Why would news move the market? It's participation, right? Volume. If macroeconomic shifts and different data releases are going to move the market, we know there's volatility there, but if there's going to be continuation, again, follow the leader. What is the volume on that move? One of our favorite sayings, and I didn't know what kind of Friday we were going to have, but let's take a look at what we've got here. Right here we have the S&P closing up not only near the highs of the day, but at the highs of the week. And we have a saying in trading. I don't know who came up with it, but it's a true one. Don't fade Fridays. Frankly, we don't want to fade any day, right? We don't want to fade any day. But the common question that I'll get, and it's a great question, is, well, is this a real move? Is this a good move? And it's a fair question. It is a fair question. So what I like to do is I'll start looking back at a few things. And I'm gonna do this right now. I'm gonna take a look at going back the last 2 weeks. Heck, we can even just look back the last handful of days, but I like to look back about the last 2 weeks and just see what kind of movement we've seen in the market relative to today, right? So is today a move that had a lot of participation? It actually is not. It actually is not. It doesn't mean that it's unsustainable, but when I look at the move on the 13th, this was, I believe, 132% of the previous 14 days volume. So it was an above average volume day. Today really wasn't. So that's one thing that I'll make note of. Today really wasn't above average. In fact, it was a little bit below. But still, we don't want to fade Fridays because think about what happens. Folks go home and they start asking themselves, well, how did the markets end this week? What happened? They're strong. Do you think anyone's going home and thinking that they want to short this? Remember that 80+% of market participants are momentum oriented. They want to buy as something's going higher. They want to short as something's going lower. That's the bulk of retail traders, your average retail trader. You are not the average retail trader. If you're here at Simpler, if you're watching this video right now, you are far from. But remember what a lot of market participants are doing. They want to get in on the direction that the train is going. So on Monday, we're likely going to see, on Sunday, we're likely going to see a little bit of that follow through, unless there's news coming out tonight, Friday, Saturday, or Sunday before that Asian Open that changes people's opinions from the way that they ended today. So not a lot of big volume on this move. All right, another thing to point out. A lot of folks are saying, okay, Rog, if we keep going, where does volume say we could go? Great question if you're wondering. Let me show you here. Take a peek at the resistance that we've seen most recently. A lot of folks have said, Rog, when you're looking at your V-score, it looks like there's a lot of peaks and valleys. That's true, right? And part of what I want to teach you all next Wednesday when we get into our second webinar of the series of 2, before we get to our class on November 5. By the way, if you missed the first webinar, do check it out because it's going to fit really nicely with the second webinar. The second webinar is not the same as the first. The first was weekly time frames, where the V-score came from, the history of its accuracy, and daily time frames, and how I've been swing trading. Next week is really the bulk of what I've been doing since mid-June forward, which is day trading. Let's say you say, Rog, I'm really not worried about longer term. I don't want to swing trade. I want to day trade. I absolutely hear you. And day trading has been far outperforming everything else. So we're going to talk about how the same approach works in day trading. And that'll be on Wednesday. But the idea that V-score is only for weeklies or dailies is actually incorrect. We use V-score in a 5-minute time frame as well. and we look at it as support and resistance. So a lot of folks ask, Rog, how do you know? Well, if you can read a line chart, which I think a lot of us probably did at some point in our career, that one single line that shows the closes of a particular symbol, you can read a V-score. You look at support and resistance. And this shows that we could get up to 4,100 if we were to revert to the mean of the V-score, which is a volume-derived indicator. We could get to 4,100. I know that seems very far away, but it wasn't all that long ago that we were preparing for doom, right? As we broke down through 3,600. Didn't quite work out that way. By the way, I'll be just as skeptical of continuation through 4,100 as I was skeptical and warned everybody, please don't short through 36 and 3,500 unless you've got a very short time horizon. Please don't short down there. I'm going to tell you, please don't buy through 4,100 either. So we're going to be equally as skeptical at both of those extremes of these volume levels. So what's going to be pulling this stuff along? Volume, participation, right? So we don't have a lot of participation here. I do want to point that out. Didn't know how the week was going to end up, but I will be careful about, maybe I would be cautious about, A, not buying up here, and B, we might get a little bit of a pullback because this wasn't a surge of volume. Now, there's another school of thought when it comes to volume. What if we have a lower amount of participation today because some folks are on the sidelines thinking, yeah, I'm not really sure that we're going to be able to take out 3,800 or 3,900 on the S&P. They go home, they see how the markets closed today. They say, I missed the move. So another thing about less than average volume, which is why it's very tricky to use time or date-based volume and why it's so much more important to use price-based volume, right, is because people might go home and say, I missed this, and we'll see that surge of participation Sunday, Monday. Keep that absolutely in mind, right? These are things that could happen because we still have, according to the V-score, more upside before we exhaust, which is great news for traders who are thinking, well, what if we pull back? Where's the support on the pullback? It's sitting at about the -1 standard deviation. That's sitting just at about 3,800. So that's going to be some good support. And you can already see 1 day, 2 day, 3 days where that -1 standard deviation of volume was your volume-based support zone. Pretty cool, right? Once you understand what the secret squiggles are telling you, believe me, gang, it's like reading a line chart. All right, so this is just the S&P. What about yields? Let's talk about the long bond. It's hard to talk about optimism in equities without what's going on with yields. I will say it's a little strange what we see in yields today. A little bit of a disconnect, and here's why. And we're going to want to watch this next week, and we'll talk about volume implications here too. First of all, bonds, ZB, many of you probably trade, say TLT to trade the long bond. ZB is heading lower, and it's still in a downtrend. The idea that ZB can continue going higher was probably in large part fueled by Janet Yellen's comments on Monday, which was essentially we might buy back those bonds. Recycling, I think, is what she said. QE, recycling, call it what you will. The question is, can we break down through the support of, say, the 117 handle, 117.20, and start to punch up to higher yields? Remember, yields moving higher is the bond market moving lower, right? So they're inverse in terms of what they're doing. If we're down on bonds today, that means yields went a little bit higher while equities moved higher. That's a little bit of a disconnect, and that would be concerning. A lot of folks have also asked, Rod, what about VIX? What about volatility? There's a VX futures for that. So VIX is moving lower. Well, it makes sense. We've come off. Take a look. We've come off this very consistently strong resistance level throughout the year. We're coming down towards potential support. Where will I be concerned that the volatility ramps back up and we could sell off in equities again? Closer to about 24.5. But there's still some more room to the downside. You might say, Rod, can we measure the VIX with some volatility? How about a -1 standard deviation before we start to worry? And the -1 standard deviation says, don't worry about that price-based support around 24.5. We could probably get down to 24, maybe even a little bit below 24, call it 23.60, before this starts getting a little bit more supported, suggesting that whatever strength we're seeing in equities is going to maybe do an about face as the VIX reaches a volume-based support. How many times have we hit this? Well, let me show you. All right, here. Okay, so there's the first time, and here's the second time. Both times did a pretty admirable job of moving us higher. The second time, clearly more than the first. And let me show you something else that's really important. When did it break out and make a much more significant move? This first time, we moved from the -1 standard deviation to the mean and then stopped. The second time, we moved down to the -1 standard deviation to the mean, and then look at that. We broke it and kept going. Those are the kinds of things that we can glean from volume-based support and resistance. See, price just, it is what it is. The volume tells us what kind of participation and attention is that move getting. That's what we're measuring. That's where the edge is. Most people aren't able to do that because they don't have a way to measure volume-based trends and volume-based support and resistance. That's what's so cool about this. So while bonds look like a little bit of a disconnect, I agree. VIX seems to be saying there's a little bit more room to run for equities. And heck, if bonds start moving higher, great. I don't really see where quite yet we're ready for that. We'd have to take out about the -1.5 standard deviation before we do that. But as long as we don't punch down to brand new lows in volume, we might start to see maybe the beginning of some bottoming action, but it's way too soon to tell. And how do we know that? Volume's not in agreement. Price is not in agreement. In the S&P, different story. In the VIX, different story. So here you can see where that volume is giving us a lot of insight into a couple different scenarios. So those are things that ultimately I will look at. I'm going to measure the market. I'm not going to make, different opinions of the kind of hyperbole I see. Gang, we trade what we see, and we're traders. Remember, if you're, and let me be fair with folks. If your time horizon is the next year, don't listen to what I'm saying, because I'm not looking to predict where we're going to be in the next year. I don't know anybody who can, but they're certainly free to try. I'm looking at, as a day trader, what can I see in the market now that might give me a high probability opportunity as a day trader for the next 30, 40, 50, 60 minutes, right? Hour and a half. That's it. As a swing trader, what can I see that might give me clarity for the next 3 to 4 days to maybe 3 to 4 weeks, right? As traders, we have a very different time horizon. We're not looking to predict whether or not we're going to 35,000 on the Dow or whether we're going to 25,000 on the Dow. And by the way, television likes to talk that way because it keeps you tuned in, and they paint pictures that are possibilities. But what I'm going to say is please, please, please look at the macroeconomic data. Look at the Fed funds target rate probabilities. Look at the bond yields, and then make a decision with a far more finite time horizon. Not that we could crash someday because, right? Even that argument should have stepping stones of data that are being reacted to in the market. And clearly that's not what's being reacted to right now. Okay, so again, it's not a matter of whether or not the markets are going to go significantly lower, meaning the indices are significantly higher. We'll just use the information we have right now. The Dow still has a little bit more room to run because we can get up to about a plus 0.5, so a positive half standard deviation read before things get toppy. This is the way that I'm going to continue to measure the market. All right, gang, hope that helps. If you have any questions, leave them here below. Thanks as always for your time. I want to give you all actionable ideas to make money. I'm not here to spin, stories and different tales of what could happen. I want to be able to give you all an entry, an exit, a stop loss, a plan. And I want everyone to be able to grow their account in a very systematic pattern process based way. Just for example, today we had 4 day trades this morning. We traded for about an hour and 10 minutes. We went 4 for 4. What do I know about what happened to traders who followed this kind of analysis? They made money and they called it a day. That's what I'm here to do, gang. Give you a plan, right? Not a story, not trying to scare anybody, and not trying to give anybody any hopium either, as they call it. What is a plan that we can take advantage of in a very finite time frame, time horizon? Do what we have to do, get out, and then do it all over again. That's what I'm looking to do. That's income, gang. I'm not looking to project into the future where we might be because, frankly, my crystal ball has been in the shop for my entire trading career. All right. Be good to each other, gang. Thanks for your time. I'll see you on Sunday for our weekly Roggy report. And then I'll see you next Wednesday for my webinar number 2, November 2 at 8 p.m. All right, gang. Be good to each other.